We are at that point where the Fed is broadcasting what's going to happen here. I'm a little nervous. You should be a little bit nervous because we've been talking about this for a very long time. And we can see the writing is on the wall right now. We can see what the Fed is about to do. Now, if you don't know what I'm talking about, we know that they've raised interest rates by 25 basis points back in December of 2015. And then they waited a year after the elections. They did it December of 2016, another 25 basis points. As soon as Trump was inaugurated, what did they do? Well, they raised the rates once again by 25 basis points. And we know that there's a lot of Fed meetings coming up. And what they're going to do most likely is continually raise. Now, we've seen this pattern before. We discussed it before, where the Fed, when they want to bring down the system, they start raising the rates. And they're going to do it very, very close together. And this is a signal. And we're getting more information from the Fed, which they are telling us that they are preparing to bring this down. Because we went from a healthy, strong economy, which was being handed off to Trump, into an economy now that might be shaky, where the stock market might be on the verge of collapsing. It's amazing how things completely change in, 2-3 months? How did anything change? What did Trump do? Absolutely nothing. So what are they doing right now? They're setting it up. Now, you can tell when you step back and you take a look that they're setting this up big time. We know Trump is out there taking credit for the stock market going up, and he's playing it up really big. But they're hoping, they want him to do this. They're playing into his ego. And what we're seeing right now is they're going to continually improve the data. They don't want it to start coming down already because it's still too close to Obama. So they want to make it look like Trump is really doing something to the economy. Then they're going to have it fail. And this is all part of their plan. So we see ADP, they reported a whopping 298,000 jobs. They were added. Now, this is the biggest increase in 6 years. Now, of course, they went back and they revised some numbers. In February, they brought numbers down from 298,000. They brought it down to 245,000. And they did this to bring the numbers up for this month. Now, they want it to look really, really good. But if you look at the year-to-year graph and you look at what has been going on, you can see that we've been bouncing around and we really haven't moved that much since the Great Recession. We're at the same place. They brought it to the same place we were right before the Great Recession. And we know a lot of these jobs, well, they're not the high-paying jobs. They're not the great manufacturing jobs. These are part-time jobs. And remember, if you have 1, 2, 3, 4 jobs, they count that multiple times. And we can see that the ADP and the BLS, they're in lockstep with each other. And of course, they need this to create this illusion. But we're seeing signs of other indicators that are showing us that things are not going well. Now, as Trump was being elected, all of a sudden, we had this incredible surge of a lot of this data. And now we're starting to see this data, and this was the soft survey type of data, where they look at it and they say, okay, we think it's going to be that, we think it's going to be this. But we're getting the hard data in now, and this hard data is showing that things are not going well. We had this little bounce up, and it is coming straight down. We see that the service PMI, well, the non-manufacturing ISM, both of them missed. They dropped from 57.6 to 55.2. This is the lowest since October, right before the Trump election. And there were declines in three of 4 key components as business activity and new orders dropped. But the most notable was the slide in the employment sub-index, which barely avoided contraction, sliding from 55.2 to only 51.6, the lowest since August, and refuting the post-ADP euphoria. Now, if we look at this, we see business activity, it fell from 58.9, and it used to be 63.6. New orders fell from 61 down to 58. Employment fell from 55 down to 51. And we can see right now that things are not looking good. Now, a lot of the states which we reported on before, they are making a move to separate themselves from the Federal Reserve. They see the writing on the wall. They understand that this system is coming down. And we're getting information, and we're seeing more states submit bills. They introduce these bills to make gold and silver legal tender outside of the Federal Reserve. Now, a bill was introduced in the Texas Senate, and it would establish gold and silver as legal tender in Texas. Now, the passage of the bill would create currency competition in the state and serve to undermine the Federal Reserve. Now, Senator Bob Hall, he introduced this Senate Bill 2097 on March 10th. Now, the bill includes a number of provisions to establish gold and silver as legal tender in Texas. It declares specifically that certain gold and silver coins are legal tender and prohibits any tax, charge, assessment, fee, or penalty on any exchange of Federal Reserve notes for gold or silver. Now, this is very interesting because we're starting to see many states do this at this point. And this tells us that they understand what is going on. Now, along with that bill, we understand there was another bill which established the Texas Gold Depository, which was done in 2015. Now, the passage of SB 2097 would set in place all 4 steps states can take to encourage sound money and take on the Federal Reserve. So, what are we seeing here? We are seeing states react to what is going on in the economy. Now, if the economy was so great and everything was so wonderful and everyone had a job and the economy was chugging along, the states wouldn't worry about this. This would be the furthest thing from their minds. But as we can see, every passing day, we're seeing another state and another state continually do this. This tells us, well, a couple of things. First, they're being proactive. They want to make sure their state is going to be okay. Next phase is they're going to have to tell their people in that state, I would suggest buying silver, I would suggest buying some gold, and this is what we've been saying for a very long time. Now, I don't sell silver, I don't sell gold, I make nothing on it. There's nothing on my website that tells you to buy gold and silver. I am not an affiliate or anything. I buy it myself. I buy silver, I buy gold. If you can't afford gold, now I don't buy the 1 ounce coins, I buy the tenth, I buy the quarter, depending on the income coming in each month and how much I have left over. I buy a lot more silver because it's a lot cheaper. Now, you can also buy junk silver. But whatever you're doing, make sure you have some of it. Now, do you have to take your entire wealth and turn it into gold and silver? Well, that'd be kind of impossible because you still need to live. But what I would do is take a percentage. What would that percentage be? This is my personal opinion. Maybe 15%, maybe 20%, 10%, around that range, and make sure that you guard your wealth, because once the banking system closes down and you can't get your funds out of the bank and the currency is completely devalued, what do you have left? I mean, your TV is going to be worth nothing. Computers are going to be worth nothing. Nobody wants that stuff. They might want food. Yeah, you might be able to profit from food, water, toilet paper. That might be very, very popular. Medicine. But again, gold and silver, because that is going to go up in value. And we're seeing China, we're seeing Russia, and we're seeing states within the United States do this. Now, we got some news from the Fed today. They had their minutes, and there were some interesting things in there. And they're warning of downside risks. And they're looking at the stock market, and they're worrying that the stock market, well, it might be due for a correction, a significant correction. It looks like it might be in a bubble. Now, did they use the word bubble? No. That's what they are saying. And what they're doing right now is they're trying to unload their balance sheet. They are raising the interest rates. Now, I want to go back in time, back to 2006, 2007, 2008. And I want to go to what Bernanke said. Because he said, with the Fed having backed itself into a monetary policy corner, they will have little choice but to use negative rates during the next major economic downturn. Now, think about that for a second. So what he's saying is, if we come up to another economic crisis, they're going to have to reverse the interest rates once again. They're going to have to start bringing them down. Let's go back to 2006, 2007, 2008. What did they do prior to the crash of 2008 going into 2009? They were raising the rates every month or every 2 months, about 25 basis points. They brought it up, up until they understood and they saw the economy start to rip itself apart. Where they saw real estate, well, that was coming down. The market, that was fluctuating, which we're seeing now. They saw all this. What did they start to do? They started to bring the interest rates down and down and down. And when the crisis hit in 2008, how far did they bring it down? Close to zero, right? I mean, there's other countries in Europe where they're in negative range right now. They already know they're going to need to do this. They've already made the announcement. They're telling you, when we come up to this economic crisis, what we're going to do, we're raising them now, but we're going to bring them right back down. And this time it won't be zero. It will be in the negative range. And you don't think they're going to create currency like there's no tomorrow? Of course they are. This is what they need to do at this point because they brought the economy to where it is today and they can't go any further. So they need to bring it down right now because it cannot be sustained. Now, just because they go to negative rates and they start printing currency, does that make the economy fine? No. But they're going to make it look like they're the heroes. But something else came up today. An historian, Werner Abelschauser, he is an historian, an economic historian. And he's saying that the European Central Bank could be about to trigger another devastating flash crash less than 10 years after the financial crisis of 2008, because the ECB right now is warning governments to brace for higher rates. They're doing it just like the Fed is doing it. And this is the interesting part. He has warned that the banks that stepped in to halt the financial crisis 9 years ago could now be about to trigger another devastating crash. He believes the ECB could now be the next bank to bring the industry into another downward spiral, along with the Bank of China and the Federal Reserve. When asked who could be likely to cause the next crisis, he said the central banks could trigger the next crisis. And he's absolutely right. I mean, this is an economic historian. He's looking at history. He's looking at what has been done in the past. And he's looking at today. And he's seeing the same thing that we are seeing, which shows us, and if we look at and we listen to many other individuals like Charles Nenner, David Stockman, Cliff High, Harry Dent, many of these individuals have been saying the same thing, that this system is going to be coming down towards the latter part of this year. And they warn during the springtime, moving into the summer, things are going to start to rip themselves apart. And we're looking at indicators from the past to see, do they apply to today in the future? And we are definitely seeing this. We can see what they do. Now, remember, these central banks, the deep state, they pretty much do the same thing over and over and over. And this is why people have noticed patterns over the year, 7 or 8 or 9 years apart from each crash. And they try to vary it a little bit, to throw us off a little bit. Oh, it's going to be 8.5 years this time. But it doesn't matter if it's 7 years or 9 years. It's still going to hit. And they know that they only can keep the system going for that long. They pump it up. They bring it down. But this time, there's no way out of bringing it back up. They're going to try. They're going to do whatever they possibly can. They want everyone, and this is the whole point of it, they want everyone to believe that they're going to save the economy once again. So they continually look like heroes. And they're getting prepared and ready to blame all of this on Trump. And we can see right now, if it's not Trump, it's going to be another country, or they'll blame it on this next event that is coming, which maybe, most likely, is going to be a war. But what we're seeing right now is they're pushing and they're heading in this direction. Now, everyone should be looking at this, and we've been reporting on this for a very long time. Everyone should be saying, you know something? Just to be sure, and let's say the worst case scenario, nothing happens. We go another 9 years and there's no crash. What do you have? You have food, you have supplies, you have gold and silver, you have cash on hand. What did you lose? Nothing. You can use all this stuff. But I don't think that's going to be the case. I think what's going to happen is things are going to get even worse, because we can see what's going on around the world. We can see what is happening with the deep state. We can see how everything is fitting together now. And we're at that point in time where things are going to rapidly deteriorate. And if you're not prepared, you won't be able to get prepared when it hits. It's almost like a hurricane. When the hurricane is above you, and the news and other people are telling you, you better get batteries, you better get food, you better get stuff, water, because the storm's coming. And you say, no, that storm's going to blow off. It's never going to hit. Don't worry about it. And then you wake up one morning and you see the wind at, 80 miles an hour, rain's coming down, and you're like, oh my God, what am I going to do here? I have nothing. You try to run to the supermarket, shelves are completely empty. There's nothing there. You try to go to another market, the storm's getting worse, the wind's getting worse, you can't really make it, so you decide to come home and you hunker down, and you have to live off whatever you have. Now, if it's a really bad storm, you might not get supplies for a couple of days. Think about an economic collapse. Do you think it just passes in 2 weeks, 3 weeks, 4 weeks? Some people saying it's going to last years. Other people say it's 90 days.